And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott update for the S&P 500 for Wednesday, August 11th, 2021. The market did react favorably to today's CPI figure. And so out of the two scenarios that we spoke about last night, the upside kicked in and worked. In fact, went straight to the resistance zone that I initially was looking for as a possibility that this could complete the minute third wave, which got up there and then it came off, which gave me a little bit more strength or support that this indeed did complete minute three. But the rally right up until the close kind of put that on pause. And then I was able to, with today's high, continue and build or put in place the wedge, the upper channel and the lower channel as this built and then came down. So I had additional points. So the wedging is occurring. And it kind of peaks out right about there and the current trajectory. If the market just kicks in and keeps going up as we open in Globex in 20 minutes or tomorrow. So what it does open up now. So I am going to leave this as a 4. And this is a 5th and it is wedging. So it is a triangle pattern. So this completed 3 and this was the 4. And now we're moving up in the little 5th. And that we then complete sub-minute wave 5. And that then completes minute wave 3. And I'm looking for that to happen up in here. So at least as to you can see where this intersects. And maybe we get some throw over and it drives it up closer to 44.53. And how can that happen? In the same fashion that it did today, that the market once again embraces the PPI, which comes out tomorrow. So they balance those out. CPI came out. Yes, we still have inflation. Yes, it is real, but it came in less than what they thought. So, okay, we can deal with that. We like that. It's not as bad as y'all thought, et cetera, et cetera. However, the market's going to react, that's fine with me. I'm just telling you what likely gave them comfort to step in and do what they did. So again, we may have that same situation because tomorrow's PPI. One was consumer, tomorrow's producers. And so the story is, it's like if the producer prices their inflation is higher and they're getting caught in that, that's going to be passed on to the consumer. So trust me, we'll get it eventually, but it's how the market will react to that. But I would think that if one is eased, the other will ease off as well. And then they balance out and then we kind of are stable will be the market interpretation, whether that's true or not. I don't care. But the market may react, give us that little push higher that we got this morning, and that would bring us up here. That would be fabulous because today the market really rallied from 25 to 40 pretty quickly on the first run. It got up to 39. So it got up 14 points and then it added an additional 5. So if it did that again tomorrow, goes up 14 from here, puts us at 54 already. An additional 5 puts us up towards those higher zones that would work out really well for the count and for reaching these higher levels, which I still expect. So for tomorrow, if we continue to embrace the figures, then I would expect it to go up and I would look for those higher levels. If they don't, then this could remain in places to 3. I mean, if I have to finish it here, I can. Cleaner or here is a failure, let's say that. So either way, I could complete it and then the market does flip and goes down off of that number. Then we can complete the third and be looking at a 4, a minute 4. And once I can put that in, then I can draw and put in additional Fibonacci retracements of what we're looking for. Wait for it. We get an ABC. If it does not break the high, say overnight, it doesn't get up there, comes down, hangs out right here, the figure comes out and they drop it, then this would be 3, and then we got an ABC. And we'll still work it out in terms of levels, but we're only looking for a wave 4 correction, a little bit bigger because it's a minute. And then we're into the minute wave 5, and that completes minute 5, minor 5, intermediate 5, primary 5. We got a lot going on. We got a lot finishing here. So we could get a lot of the blow off type stuff, is people reach and grab for the stars. And again, it happens because we're in no man's land. These are uncharted waters. These prices have never been touched before. So you know, reasons have got to be solid in my mind. You're going to step up and you're going to start paying all-time new highs, even in the stocks, but in the indexes, because of what you might expect 6 months from now, or 3 months from now, or 2 months from now. Yeah, all kinds of different reasons. And you know, I think I can buy it at 4,450, but I can sell it at 4,460. Then fine. So it depends on why you're trading and et cetera, et cetera. But there's a lot of participants, and so there's a lot of reasons for the market to go to where it goes. We put in our channel lines. Downside, it would be very convincing that it's going to continue if it starts to break. First of all, this is the hourly. So it breaks the hourly 4, breaks the hourly 8, and then breaks the channel on its way to breaking the 20. I think if this really is a disappointing figure, $7 is not going to mean a whole lot to the sellers in the S&P off of all-time highs. So you're going to get a lot of market orders. And I think we can get them even if it's a wave 4. So I think it can come down to within this territory that puts us in here, or it brings it all the way down to this one, actually. And that gives us down to 44.12. So we're still going to remain hopefully above 4,400, even during the next corrective period, and then get an additional strong rally. And that'll hopefully take us up to 4,500, and that might be the end for a while. But for tomorrow, limited downside, 30 points, and actually limited upside. So we maybe got 20 to 25 points to the upside before we turn. And from wherever it ends, just measure it down to 4,400. And that's our downside risk, even for the day. This is where I'm going to leave it. Next update will be Thursday, August 12th.